Hi, good morning, all of you. Welcome to the session. And today is our last session, and we are winding up our standard costing. We will wind up it. And you can see this is one of the most important chapter, and definitely you will get at least one question in exam from this chapter. It's a very important chapter. So we are winding up the session with this topic, very important topic. And what I have planned that we can practice more questions. So I have time. We have one more session extra, right? So we can practice some more questions. So just in front of you, I have taken a question and we will practice this. So I expect all of you to read through this question and we will discuss and we will solve it. Okay. So this is a question on material variances. Read this question and we will discuss this. Read it. Read this question. And we will discuss this, and I want all of you to solve it. Okay. So what is the question? Let's read it. What is the question? Handle easy manufacture biodegradable plastic shopping bags. What type of product they are manufacturing? Biodegradable plastic shopping bag they are manufacturing. Then what is happening for renowned top shopping brand? Okay, so actually there is a company HE, and this company is manufacturing plastic bag. For whom? They're manufacturing this plastic bag for a shopping brand. All right, they are manufacturing this plastic bag for a shopping brand. Then what is happening? The standard cost for the plastic that goes into making a shopping bag is ₹8 per kg. So what is the standard cost of plastic? ₹8 per kg is the standard cost of the plastic. Then, and each bag uses 40 grams of plastic after an allowance for waste. Okay, so it is mentioned that how many plastic bags they are producing, and it is mentioned that how much plastic they will use to produce the bag. Then what is mentioned? In November, 1 lakh shopping bags were produced and sold by this company. So in the November month, they have produced and sold how many bags? 1 lakh bags. Okay, then, and this was well above the budgeted sale of 60,000 shopping bag. And it is mentioned it was above the budgeted sale. So if you will see, 60,000 was a budgeted sale. What? And what is the actual sale? So what is the actual sale? 1 lakh unit is the actual sale. All right, see, it is written, were produced and sold. So that means this is what? This is your actual sale. Okay, then what is mentioned? The actual cost of the plastic was what? 0.10.5 per kg. So the standard cost is mentioned here and the actual cost is given here. Both is given, right? Standard was this and standard actual is this, right? And then what is given? And the production manager, who is responsible for all buying and production issues, explained that since biodegradable plastic bags are made from corn and potatoes, and due to raise in price of the potatoes, push the plastic bag price by 20%. So generally what happened in India, we don't have biodegradable plastic bags. I have seen in Dubai, you know what happened? The bag which they produce are actually biodegradable. If you keep them as it is somewhere for a month, it will biodegrade itself in your home. If you keep it unused, keep it somewhere, plastic bag will be, it will be in powder, in the form of powder within a month, from a plastic to powder. They actually use everywhere. They actually use biodegradable plastic. Not in India. I have not seen it in India. Okay, so what happened here? So this company is actually producing biodegradable What plastic bag? Okay. And these biodegradable plastic bags, they are made up of corn and potato. So corn and potato is getting expensive. So because of which the price of the polythene is expensive now, because they are making it from potato price is increasing. So for that reason, the price of the plastic is increasing. Okay, then the price of the plastic is increasing. To deal with this situation, manager decided to contract a different supplier. This new supplier promised better quality and increased reliability of a slightly higher price. He said that he was overspent, but not all increase in plastic price is his fault. So what is happening here? To deal with the situation, company is contacting whom? Supplier, because supplier is supplying the raw material. And what is happening? This new supplier promised to provide the better quality and increase the reliability for a slightly higher price. He spent that, he's saying that, supplier is saying that it is not our fault. It is beyond our fault, right? That he has overspent, but not all increase in plastic price is his fault. So he is saying it is not his fault, right? The price of plastic bag is increasing, is not his fault. Okay, see, the point is that we just don't need to do the calculation here. Why? You have to read it very carefully for a reason, because if you will see, sorry, I'm so sorry. Okay, so if you will see here what is happening, they're asking you analyze the situation. Analyze the situation. So what do you have to do here? Analysis the performance of the production manager. You have to do the analysis. Can you imagine? Maybe this question is of 10 marks or something, 5 marks for these. So the point is that you can imagine just for analysis, they will give you marks, right? Calculation is very easy, right? So they will not ask you much about the calculation. Just one part of the question is about the calculation. Calculate the market price variance and calculate the material quantity variance or usage variance. But the point is that what I mean to say that calculation is not actually the thing which you have to do. The main thing here, what you have to do is analysis. You have to analyze the question. You have to do the analysis. Okay, so what is mentioned here, the actual usage of plastic per bag is 0.35 gram. Okay, here it was mentioned each bag uses 40 gram of plastic, but here what is mentioned, actually one bag will use 35 gram of plastic. Okay, and again production manager had an explanation that standard size of shopping bags increased by 5% due to change in regulation by government. So what is happening here? The size of the shopping bag increasing the size of the shopping bag. Why they are increasing the size of the shopping bag? Government regulation. Okay, however, new supplier provided much better quality plastic which help to cut down on waste. This company carries a very little inventory since they operate in just-in-time system. So what is happening here? The company is working on just-in-time system, right? The company is working on just-in-time system. First part of the question is asking you what? Calculate the total price variance and the total quantity variance, right? So if you will see, let me first write the formula for material price variance. What is the formula for material price variance? Standard price minus actual price actual quantity. And what is the formula for material usage variance? It is also known as material quantity variance. So what is the formula? Standard quantity minus actual quantity into standard price, right? This is the formula. All right. This is the formula you can see here. So we have taken a formula for material price variance. We have taken a formula for material usage variances. All right. Now, what do we have to do? We have to put the values here. We have to find the answer first, because in the question, they're asking you calculate the total material price variance and calculate the total quantity variance. Okay. So what do you need here now to calculate it? You need to know what is the standard price and what is the actual price and what is the actual quantity, right, of raw material for actual output. Just remember, standard quantity of, let me write it completely. What is it? Standard quantity of raw material for actual output. We always consider it for actual output, how much standard quantity of raw material is required here, right? And here, what is the actual quantity consumed for actual output? So here also standard price minus actual price and actual quantity consumed for actual output, right? So this is the formula we have here. Now to solve it, it's very simple. We just need to see the information from the question, put it here, you will get the answer. Standard price, what is the standard price? Rupees 8 per kg is the standard price. Hai what is the actual price? Rupees 10.5 per kg is the actual price. Just remember, it is the price per kg. And you can see here, the information is given in gram. So just keep it in mind when you're solving the question, see the information, what type of information they have provided you in the question. Okay. Achha, what is the actual quantity for actual output? See what is the standard quantity of raw material for actual output. So actually we are producing 1 lakh unit. How many units we are producing? Actually, we are producing 1 lakh unit. These are the final units that we are producing. And how much standard quantity of raw material is required for 1 unit? In 1 unit, standard quantity is 40 gram. Now do one thing, convert the gram into kg. So I'm just converting the gram into kg. Okay. 1000 gram is 1 kg. So what will happen? You will get the information in kg. Right. So to produce 1 lakh unit of output, the standard raw material required is this. Okay, let's put the information here. What is the standard price? 8 minus actual price 10.5 into actual quantity consumed for actual output. What is the actual quantity? 4,000 kg are the actual quantity consumed for what? These are the actual quantity consumed for actual output, right? Solve it and tell me what is it coming quickly. Just give me 1 minute. Okay, give me 1 minute. No, sorry. I'm so sorry. What we consider here, actual quantity consumed for actual output. This is what my standard quantity. I'm so sorry. This is standard quantity, right? I told you we have calculated the standard quantity. I'm so sorry. Okay. So the point is that this is not actual quantity, right? Let me find the actual quantity also in the question. Okay, so the point is that if you will see what I have done, this is what standard quantity. Why standard quantity? You can see here what I have taken. This is what This is what standard quantity of raw material required for actual output. I told you what I'm calculating, standard quantity for actual output, right? So for 1 unit, how much standard quantity of raw material is required? This much. This is what standard quantity of raw material, right? And how many actual output we are producing? 1 lakh actual output we are producing, right? So this is what standard quantity of raw material for actual output, right? This is what standard quantity of raw material for actual output, right? This is what we have calculated here. Now, what do we want to calculate? We want to calculate actual quantity for actual output. Now, see what is the actual output we are producing here. Actually, how many units we are producing? 1 lakh unit. And what is the actual quantity of raw material required here? 35 gram. So we are actually producing 1 lakh units. And what is the actual quantity of raw material required here? 35 gram divided by, if you convert it into kg, divided by 1000 gram. What will you get? 3500 kg. This will be what? Standard quantity of raw material for actual output. This is standard quantity of raw material. Sorry, this is what actual quantity of raw material for actual output, right? Why? You can see here, this is what actual quantity, actual usage of plastic bag. All right. Is there any problem now? Yes. Do you have any problem now? Good morning, Viraj. Janvi. Yes. Is it clear, dear? It is so clear to us, right? Because in the question it is mentioned, right? If you will see, it is clearly mentioned this 40 gram is what? Standard quantity of raw material for actual output. And this is what? Actual quantity of raw material, right? Now just put the information here and analyze it, answer it first. So what is the actual quantity consumed? 3500 kg. Is the standard quantity of raw material. Okay. Now let's see what is the standard, is the actual quantity of raw material, right? This is what? Actual quantity. You can see actual quantity is 3500. So, and then standard quantity of raw material minus actual quantity consumed. So what is the standard quantity of raw material? 4000 kg. Is the standard quantity of raw material. What is the actual quantity of raw material? 3500 kg. This is the actual quantity of raw material. Then what is the standard price? This is the standard price. Rupees 8 is the standard price. Solve it. Solve this. Now you have to solve it. Okay, so let's use the calculator. $8 is the standard price minus 10.5 is the actual price into actual quantity. This is coming as 8750 adverse. 8750 adverse. This is what? Adverse. Okay, next. 4000 minus 3500 into 8. This is favorable. So it is coming as 4000 favorable. If you just sum them, you will get material cost variance, right? Which is adverse. Total material cost variance is adverse. Now you can conclude. You can give the answer. You can give the conclusion. Can you give the conclusion here? Material price is coming as adverse and material Material price variance is coming as adverse and material quantity variance is coming as favorable. But material cost variance, if you will see, what is the material cost variance? Total material cost variance is actually the sum of these two variants. If you will see, I want to calculate the material cost variance. It will be sum of these two variants. That means material price variance plus material quantity variance. If I'll add them, if I'll just add them. So if I'll just 8750 adverse plus 4000 favorable, you can see it is coming as 4750 adverse. This is what adverse variance. Material cost variance is coming as adverse variance, right? You can see here. Now you can conclude. What? See, now let's see what is the second part of the question. Analyze the total variance. Total variance is this, right? It is adverse. Total variance is coming as adverse. So they have asked you, analyze the total variance into component part of planning and operational variance. Okay. So what is mentioned? So they have mentioned you that total variance, you will analyze it as a planning and operational variance. All right. So the point is that, see, the point is that they have not given you any revised budget, I can see, right? So what we can do the conclusion here only. Okay. So to solve it, we have to find the planning and operational variance also, right? Because they are asking you find what? The component of planning and operational variance. Okay. So what we have done, we have already calculated the total material cost variance. Now from here, calculate the planning and operational variances also. Okay, how we calculate the planning and operational variances? Give me 1 minute. So what we will do to find out the planning and operational variances, give me 1 minute. So whatever the total cost variance we have, we will further classify the total cost variance into planning variance. And we will classify it into operational variance. What do you want to find it? We know the standard. We have to find out the revised standard. Everything, revised price, revised quantity. Then we need to have actual whatever. If you will see, standard price is given, standard quantity is given. I can see what is the standard price in the question. Rupees 8 is the standard price. What is the actual price in the question? Rupees 10.5 is the actual price. What is the standard quantity? Standard quantity is 4000 kg for 1 lakh unit. And what is the actual quantity? 3500 kg. Now the question comes here, what will be the revised value? So if you will see in the question, they have given you the price is actually rising by 20%. It is given somewhere. You can see the price of the plastic will be raised by 20%. This can give you the revised figure actually. And what else is mentioned? The size of the plastic, according to government regulation, the size of the plastic is increasing. How much it is increasing? The size of the plastic is increasing by 5%. So what do you have to do? Size, matlab quantity, more quantity of material will be required. See what is given, the standard size of the shopping bag increased by 5% due to change in regulation by a government. Okay. So what is happening? 5% more plastic is required. I hope you can see here. So whatever your standard, what was your standard? Standard, it was mentioned that standard, we need 4000 kg of raw material. Now what is mentioned? Because the size is increasing, they need more raw material now. Right? So this will be revised quantity. So we know what will be the revised price and we know what will be the revised quantity. So it is clearly given in the question, if you will read it carefully, that in the question it is clearly given that the price will rise by 20%. And the quantity requirement will be raised by 5%. This will give you what? The revised figure. I hope it is. What is it coming? Can you just do the calculation? Just give me 1 minute. Okay, so we will get the revised figure now. Now what will happen? By using the revised figure, we can find the planning variances and operational variances, right? So now you have the revised figure, revised price and revised quantity. You know that this difference, this difference will arise because of planning variance. And this difference is arising because of operational variance. Right? So we know what difference is coming for planning variance and what is it coming for operational variance. What do we have to do? We can find everything. Planning price variance, planning quantity variance, operational price variance, operational quantity variance. We can even find the total variance in this way, right? Okay, let's calculate them quickly. Because the point is that they have the analysis based on this, right? You can find the planning price variance, right? Considering these figures. Then you can find the planning usage or quantity variance, right? You can find both. So what is the planning price variance? You can see how the price is changing from rupees 8 to rupees 9.6. This is how the price is changing, right? And how the quantity is changing. 4,000 kg minus 4,200 kg, right? This is what change in quantity. Okay. Change in quantity. So standard price minus actual price into revised actual quantity. So this will be coming as, right? So this will give you what? If you will solve it, you will get planning price variance. You will get planning usage variance, right? Now let's calculate the operational variances. Operational price variance. So what is the revised standard price? What is the actual price? And what is your operational quantity variance? So what is the standard quantity, revised standard quantity? What is the actual quantity? And what is the price? Revised standard price, 9.6. Just solve it. You will get the planning quantity variance, planning operational quantity variance. You can even find what? You can even find the total cost variance, right? You can even find planning total cost variance, operational total cost variance, right? You can even find that also. Okay, if you want, I can I can help you to find that also, because in some case in exam it may comes, right? So let me calculate everything here. Planning, planning total cost variance, how we will find it? Rupees 8 minus rupees 10.5. So this is how we can find the total variances also. Just solve these values, you will get the answer, right? So I'll just show you the answer quickly and we can practice more question, right? So let's just see the answer quickly. So we have already calculated the material price variance and we have calculated the quantity variance, right? Now you can see planning price variance they have calculated, and they have calculated the operational price variance, and they have just calculated the sum of that, right? They have not calculated it separately. Okay. So just find the total of it. In exam, you don't need to do so much in detail, right? So just take the sum of these two values. Sum of what? Planning and operational variance. So you can just see, give me 1 minute, I'm just comparing. Okay. So you can just see, we have calculated what the planning price variance. Okay. So we have calculated the planning price variance. See, planning price variance we have calculated. Then we have calculated planning quantity variance. Planning quantity variance. All right. Then we have calculated operational price variance. Operational price variance. Then we have calculated operational quantity variance, right? When you find them, you will add them, you will get the total will be, total of all these will be what? Total cost variance, right? Total cost variance. Okay. You can find the total variance also by adding all these values. Okay. Total. Now the point is that these are the value, right? Point is that why are we calculating all these things more in detail? Though we have already calculated the price variance in the question, you can see above we have already calculated the price variance, we have already calculated the quantity variance. Why are we doing this calculation more in detail? Why are we finding more in detail planning and operational variance? To find out who is responsible for what. If it is a planning variance, the strategic level managers are responsible for these variances, because here they are discussing now, like here upper mention is supplier is not responsible for everything. That means someone else is responsible. Who is responsible? Maybe the strategic level managers are responsible. They should take the strategies. They should make the strategy accordingly, right? According to the variances. So the point is that it is not all the responsibility of one person, right? So here with the help of planning variance, we are trying to find out how much here we are just trying to find out that how much the senior level management, the strategic level managers is responsible here, right? For that reason, we are finding it here. Analyze the performance of the production manager. All right. Now, production manager means the person who is producing the goods. He is responsible for the raw material consumption. Purchase manager is responsible for purchase of raw material. Okay. So the point is that if you will see here, production manager is producing the goods using just-in-time system, using lean system, and should be efficient, right? You can see that how much standard quantity was required to consume, what actual quantity he is consuming. Is it good or not? What I can see, it is good, right? I can see a favorable variances in case of production manager. I can see that in case of production manager, the variances is coming favorable. Standard minus actual, right? It is coming favorable. So the point is that his performance is good, but we have classified this more in detail. So let's see how much the production manager is responsible, how much strategic level manager is responsible. Okay. So if you will see here, in case of quantity variance is related to actually production. So here, if you will see quantity variance, we will see this is actually responsible for production manager is actually responsible for quantity variances, no? Because he will consume the raw material. So production manager will consume the raw material. He is responsible for consumption of raw material or quantity variance, right? But here we have classified how much the responsibility of strategic level manager, how much is the responsibility of production manager. Only this much is the responsibility of production manager. Remaining this responsibility is whom is strategic level manager. You can see here, this was your standard, this was the revised standard. Point is that you can see it is unfavorable. I can see this is favorable. So a production manager is giving you a favorable variances and planning manager is giving you adverse variances. You can see. So this variance is coming as adverse. This variance is coming as favorable. I can see strategic level manager have done some default, right? Strategic level manager have done something wrong, right? Because his variances for the quantity usage is coming as unfavorable. Actually, one more thing I want to tell you. I know you all know about it, but still, I don't know whether you know it or not. For that reason, I'm just making you clarification that it doesn't matter. You consider this value first, this second, or you consider this first or this second. There is a logic behind considering whether it is favorable or adverse. So it's a logic, not this figure, which one you are taking first. If it is coming negative, it is adverse. If it is positive, coming favorable. Not like that. I don't consider that logic. If you want, I can give you just a logic: cost, standard cost, and actual cost. I'm just giving you an example. So what I will say, I never see the sign actually while deciding whether it is a favorable variance or adverse variance. Let me give you that how I decide, right? How we decide. Don't see the sign, right? Sometime, because if you will see the sign, it will give you sometime wrong answer too. So how you have to see the standard quantity. If the standard quantity is more than actual quantity, is it good or bad? If we consume less quantity, less actual quantity, then the standard which we have set, actual quantity consumed is less than standard quantity, is good for the business. Or we can say this is favorable variances. Similarly, when we say actual quantity consumed is more than standard quantity, when you have set some standard but you are consuming more actual quantity, what will happen? This is not a good variances, not good. Or you can say this is unfavorable, right? This is not good, this is unfavorable. Achha, similarly, you can see this is how we decide the favorable, unfavorable variance, not on the basis of sign. Okay. Similarly, if the actual price you're paying, if you pay actual price more than the standard price, then what will happen? This is not good. You are paying more than what you have set standard. Not good, right? You can say this is unfavorable. Similarly, if you will say, if I'll say standard price, actual price is more. Sorry, actual price is less than standard price. This is good, right? This is good or favorable, right? So on the basis of this, you will decide whether it is favorable or unfavorable. You will see. Not based on the sign. I never see the sign to decide whether it's a favorable variance or unfavorable variance. This is a very good way to decide whether it's a favorable variance and unfavorable variance. You will never get a wrong answer if you will do it in this way. Okay. Now, if you will see here, I can see what these are actually, these two sum are actually the quantity variances. So the point is that not entirely the production manager is responsible, but there is some responsibility of strategic level. I can see this one is coming as unfavorable, right? And this one is coming as favorable. This variances is coming as favorable. This variance is coming unfavorable. Favorable matlab good. So production manager has actually done very good job because his variance is coming as favorable. He has actually done very good job. But what I can see that whatever the adverse variance is coming in the question is not because of the fault of operational manager, production manager. It is the default of strategic level managers. Top level management have not done that proper planning. You can see in the question, the price is increasing, the quantity consumed will increase. So accordingly, the top level management should revise their budget. They have not done it properly. We cannot blame for the increase in price, which we know that the price will increase. Government regulation has changed. We know that more quantity of plastic is required. Point is that this is beyond control of production manager. It's not within the control of production manager. Who is responsible for this? The strategic level manager. He should revise the budget now. Strategic level manager, because this is something happening externally, right? External environment. Production manager can control internally. He can control. He can put the lean system. He can remove all the waste inside the company, right? He can improve the production process. He can train the employee in the company to use the lean system, Kaizen costing. He can put all these things inside the organization. Production manager can control everything within the organization. But if there is something happening outside the organization, like the law is changing, government regulation is changing, the price is increasing because of the inflation, it is beyond the control, right, of internal managers. Who is responsible? Strategic level manager is responsible. He should consider these factors and set a revised budget for the internal managers. So here you can see this variances for the planning variances coming as unfavorable. Who is responsible for these unfavorable variances? Strategic level manager is responsible for these unfavorable variances. Who is responsible for these variances? Operational level manager is responsible for these variances. I hope you can see, right? Okay. I hope it is clear to all. Yes, is it clear to all? ठीक है, देखो, it is given in the explanation also. The production manager is subject to government pressure, which appears beyond his control. ठीक है, so if the government regulation is changing, he is not responsible for that, right? More 5% quantity is required to be consumed. He is not responsible to do that. Who is responsible then? Strategic level manager is responsible. Similarly, the price is increasing due to inflation. He is not responsible for that. You can see here the production manager is not responsible. Who is responsible? If the strategic level manager is responsible, find it. So you can see here the production manager is responsible. All right. Okay, we have done this question. Let's do some more question on this. Just give me 1 minute. Let me see, and let's take one more good question on this. Okay. Now let me consider something which is related to sales variances. So I have taken a question on sales variance also. Let's take a variety. And not just one type of question. Let's do the question of variety. Different variety. All right, let's take a variety of question here. Just give me 1 minute. I'll explain you something, then we can take it. So the point is that we have just discussed that how we decide that the variances is favorable or unfavorable, because the confusion may arise. For that reason, I have given you a clarification, but I have considered the consumption of material. So you can see in the company, we can have two type of things, right? We can have two type of thing in the company. One is what? One is your resources. One is resources and other one is what? One is resources and another one is sale, which will give you the revenue. So the point is that in case of sale also, we have what? Standard quantity which we want to sell minus the actual quantity which we actually selling in the market. This is possible now. Standard quantity which we want to sell. For example, we have assumed that we will sell 1 lakh unit. But actually we sold only 80,000 units. This is not good now. We set standard more, but actually it is less. Not good, right? So you can see how I will decide. I will not see the sign to decide whether it is favorable or adverse. I will see if the actual quantity sold is less than the standard quantity sold. It is not good. It's unfavorable. It's not good, it's unfavorable. Then what will happen? I will see. Acha, if the actual quantity sold is more than standard quantity sold, this will be what? Favorable. This is what? Favorable. All right. Similarly, what will happen here? The price variances may arise. So standard price, if is price matlab what will be the price at which you will sell the unit, and actual price. Price is what? At what price you will sell the units to the customer. Price is what? At what price you will sell the unit to the customer. Now see, if the standard price, give me 1 minute. If the actual price is more than the standard price, it is good. It is favorable. And if the actual price is less than the standard price, what will happen? This is unfavorable. This is not good. Okay, so this is how we will decide. On the other hand, if it is related to, for example, material, standard quantity of material required to consume, standard quantity, and actual quantity of material required to consume and produce the final good, actual quantity. This is what? Raw material. This is what? Raw material. See, the point is that sale we always want to increase is good. When you are increasing it, it is good. But cost or resources we always want to reduce. Come resources mein zyada production. So we always want to reduce. If it is less, then it is good. So ulta hoga yahan pe. If it is less, if the resources is less, then it is good. If sale is more, then it is good. If resource consumed is less, then it is good. And if the sale is more, then it is good. So ulta hoga yahan pe. So what will happen if the actual quantity consumed, is less than the standard quantity consumed. So if you are consuming less actual quantity, it is good for the company. It is good. It is what? Favorable. उल्टा हो रहा है या नहीं? देखो, actual quantity is less than standard quantity. यहाँ क्या हो रहा था? Unfavorable. और यहाँ क्या है? Favorable. उल्टा होता है because it is, they have opposite nature. Resource, we always want to reduce the resource for the production. Sale, we always want to increase it for the product, for, so sale zyada ho, cost kam ho. This is always our profit target, so that your profit will be maximum. Na profit ko increase karna hai to kya karenge? Sale zyada ho, cost kam ho, profit badhega, right? This is our target, that sale should be more, cost should be less, profit will be high. So for that reason, it is good if this variances is coming high. It is good if the variances here for the resources coming is less, right? Then what will happen? It will give you more profitability for the company, right? Accordingly, we will solve the question. So what will happen? You can see actual quantity consumed should be less than the standard quantity. Then it is a favorable variance. Similarly, actual price of raw material which you are purchasing, if it is less than the standard price, what will happen? It is good. It is favorable. Ulta, you can see here. If the actual price, sale price, this is what sale price is less than the standard sale price. It is not good, right? Actually, kam sasta bech rahe hain. Sasta bechoge, not good, right? Mehenga bechoge, good for the company. Similarly, sasta raw material खरीदोगे अच्छा है. उल्टा हो रहा है ना. Sasta raw material is good. Mehenga raw material bad, right? क्योंकि raw material is cost for us here. हाँ, यहाँ sale is what revenue for us. So accordingly, we will decide whether it is a favorable variances or it's an unfavorable variances. So this is what you have to see. I have explained it. I don't know whether you know it or not. I assume that since you are in final, you already know this. But the point is that most of the student will do their mistake here. So for that reason, I've given the clarification. All right, I've given the clarification. Acha, ulta bhi, let me write it quickly. So when the actual quantity consumed is more than the standard quantity consumed, it is unfavorable. Ulta, unfavorable. Similarly, what will happen in case if what will happen, the actual price is more than the standard price, what will happen? Unfavorable. Ulta. So just keep it in mind. It will be very helpful for you. You will never get confused. Point is that if your calculation will be wrong, your analysis will be wrong, right? So the point is that your analysis should be correct. If your calculation is correct, your analysis will be correct, right? Okay, now the point is that I have a question here. So just in front of you, I have taken a question. Stop. Yes, we have a question here just in front of you. And I expect all of you read it carefully. Take your time, take 2-3 minutes, read it. Read this question. Read it carefully. What do you have to find out here? Mix and volume variances. Okay, so let me read it with all of you. We will read this quickly. So what is the question? T-Tech is a Taiwan-based firm, okay, that design, develop, and sell audio equipment. They're selling what? Audio equipment. The company was founded in 1975 by Mr. Bose. Firm sells its product throughout the world. T-Tech is best known for its home audio system and speaker noise cancellation headphone, professional audio system, and automobile sound system. Extract from the budget are shown in the following. What? Home audio system division. And they have given you some information that how many systems they want to sell, the number of units they want to sell, the selling price, and the standard cost. Okay. This is for the month of January. Now, what is happening? The managing director has sent a copy of an email he received from the sales manager K. So sales manager is sending a mail to managing director. Okay. Then the content of email was as follows. Let's read the content of email. Okay. What is it? We had an outstanding month. There was an advice sales price variance on 3000. PMPO is a system they have. All right. PMPO, this is a system. Matlab, you can see here the company is selling so many products. Out of all these products, they are talking about one of the product. Okay, keep it in mind. The company is selling so many products. Out of all these products, the company is actually talking about one of the product. All right. So what is mentioned about this product? There was an advice sale price variance on this product of this, but I compensated for that by raise in price of this product. So they have given you that there was a sale price variances and they compensated by increasing the price. Okay. Units sold of 3,000, this product, were expected, but actually sale was this. Oh, they have expected to sell 3,000 unit, but actual sale is what? This. That was exceptional and gave a sales margin of this. Okay, so units sold is more and it is giving us sales volume variances. Okay, I think I deserve a bonus. तो ये कहानी किसकी चल रही है? बोनस के लिए चल रही है. अच्छा, so what is happening here? The sale manager दिखा रहा है मैंने कितना अच्छा काम किया. Is just trying to convey the managing director of the company कि मेरी वजह से कंपनी को देखो कितना फायदा हो रहा है, राइट? मैंने कितनी सारी क्वांटिटी सेल कर दी, प्राइस बढ़ा दिया, बढ़े हुए प्राइस में भी इतनी सारी क्वांटिटी सेल कर दी एंड इतना प्रॉफिट हो गया कंपनी का. वो कन्विंस करने की कोशिश कर रहा है. सो मैनेजिंग दिस सेल्स मैनेजर इज ट्राइंग टू कन्विंस द मैनेजिंग डायरेक्टर so that he can get his bonus. All right. Managing director has asked, the managing director has asked for your opinion on these figure. You got the following information. Actual result for the month of January. You can see this is the standard figure and this one is the actual figure. The company is selling two different type of product. 3,000 WMPO, 5,000 WMPO. Sales unit, how many units they are selling, at what price they are selling it. All right. What is the total market demand for 3,000 WPO, PMPO system was as budgeted, but as a result of supplier reducing the price of supporting some system, the total market of this product, second product, raised by 50% in January 2018. Now, the company has sufficient capacity to meet revised market demand for 750 of its 5,000 PMPO and therefore maintain the market share. All right, so many information, right? We will read it again. Okay, so you can see so many information they have provided you. Now, the question is what? Calculate the operational variances based on revised market detail. So what do you have to see? What is the sales margin mix variance? What is the sale margin volume variance? Then you have to comment on the performance of the sales manager, whether he has performed it well, or is it just because of the strategic level manager's responsibility? Why is his variances coming favorable, or is it of unfavorable variances? You have to check it and you have to answer it accordingly. Okay. So what do we have to see? We have to find out the operational variances. Okay, so before that, I don't know whether you know about the mix variances or not. Do you know about the mix variances and yield variances? Say yes or no and comment quickly. Do you have knowledge about the mix or yield variances, or do you want me to explain it first? The mix and yield variances. Yes. Okay, let me do one thing. Let me first tell you about the volume variances, mix variance, and yield variances. Then we can learn it, right? Because if the variance is not clear, see, this is something obviously you have already studied, but I'm just quickly revising everything. Huh? So the point is that material, this is sales variances. Okay. So the total sale variances will be equal to the sale price variances plus sale quantity variances, right? So the total sale variances will be equal to the sale price variances and sales quantity variances. Then what will happen? The sale quantity variances is actually equal to mix variances and yield variances, right? So this is equal to this, right? I'll just give you an example. So what is the mix and yield variances? So what is standard quantity variances? Standard quantity variance, we actually we calculate it for everything, for material also, raw material also, but it is for final good, right? So quantity variances means what is the standard quantity of final good you want to sell minus actual quantity of final good which you have sold into standard price at which you can sell it, or standard contribution, depends. Okay, sometime we take the price, sometime we take the contribution, depends. Okay, now the question comes, what is the mix variances and what is the yield variances? So we consider what revise actual quantity. We find in between, we find the revise actual quantity. We see what is the actual quantity. We see what is the standard quantity. The difference between the actual quantity and revised actual quantity will be mix variances. Actual quantity minus revise actual quantity will be your mix variances, and revise actual quantity minus standard quantity will be your yield variances. So in this question, you can see they are only talking about this variances and they are only talking about this variances. I'll be considering them. So you can see what do we have to consider here for mixed variances: actual quantity and the revised actual quantity. Give me 1 minute. Is it clear? Please write and comment quickly. Any student have doubt here? Actual quantity minus revised actual quantity is mixed variance. Any of you have doubt here? Please write in comment if you have doubt. Yes. Explain, please. What do you want me to explain, Janvi? Is it clear? Please write in comment quickly. Yes, Janvi. Quickly. Okay. So you can see here, what do we have to find? See, just remember the formula, huh? Actual quantity minus the revised actual quantity into standard price, selling price, and standard selling price will be same in both the cases. Revised actual quantity minus actual quantity. This is what mix and yield variances. I assumed you have studied it in your basic classes. Okay. Now what do we have to do? Calculate first what? Calculate the following operational variances on the revised market detail. So what do you have to do? Sales margin mix variances. Okay, let's calculate it. Okay, I'm removing it. I hope you have written all these information. I'm removing it. Huh? So calculate the operational variances. Aapko, you have to find out what operational variances here. And then what do you have to see? The volume variances. And you have to comment on it. Okay. Okay. So volume variances means what? Standard quantity minus budgeted standard actual quantity. Will give you the I'm just making the table. So first what I'm calculating, sales margin mix variance, right? First I'm calculating this. I'm making a table here. for you, and we are calculating this. Right? This is what I'm calculating for you. Sales margin X variances. Okay. So what do we have to do? I told you we will consider the actual quantity and revised quantity. So what is the actual quantity? And what is the revised actual quantity? Okay, so you can see here what is your actual quantity given, right? 1500, 600 is the actual quantity. It is given in the question, you can see. This is given, right? You can see the actual result is given in the question. This is what? Actual result for the month of January. What is the actual quantity sold? So we have two products here. Product. You can see we have two products here. 3000 watt PMPO is a product. And what is the actual quantity sold? It is mentioned 1500 units is the actual quantity we are selling it. All right. Okay. The next product is what? 5000 watt PMPO. What is the actual quantity sold? 600 units. These are the actual quantity. What is the total unit here? I can see 2100 unit is the total quantity. Right, we can take the total quantity here, 2100 units. Okay. Then we will see what ratio we will consider here. The ratio will be on the basis of what? Standard. We always consider the standard. Just give me 1 minute. Give me 1 minute. We consider the standards for finding this ratio. We consider the standard. How will you find it, ma'am? So revised actual quantity should be allocated on the basis of standard quantity ratio. Standard, I'm just writing it so that you can learn if you don't know. Okay. It will be on standard quantity ratio. See what is the standard quantity ratio. You can see here what is the standard quantity we are selling. These are the standard quantity of raw material that we are selling here. Okay, 1500 and 500 are the 15 and 5 will give you a ratio 15:5. So this will be 3:1 is the ratio, right? 3:1 will be the ratio in which you will find it, right? So 2100. No, what is it? 15. Give me 1 minute. Okay, just give me 1 minute. So we will, what we will do, we will allocate this cost. So we will allocate this cost to revised quantity here, and it will be coming as 1400 units, and it will be coming as 700 units, right? Just give me 1 minute. I hope it is correct. Okay. And what else do we have here? To find out the mixed variances, what is the standard price? So what is the standard price in the question? I can see the standard price as 18750. Okay, Acha, just give me 1 minute. If you will see in the question, they have given you what? Not, they are not asking you to find out the sales price mix variances, right? I told you that sometimes we take the price, sometimes we take the contribution, right? So if you will see here, they have given you sales margin variation, or which is also known as contribution variances. So you need not to find out this. What do you have to find out here? You have to find out sale contribution. You have to find out sale contribution margin rate, sale contribution mix variances, right? This is what you have to find out, sales contribution mix variances, right? So contribution, we have to consider here the contribution. So not the price. We don't need to consider the sale price. We need to consider the contribution here, right? Okay, so what will be the contribution? I have to check it. Achha, standard cost is given and standard price is given. Let me see if I'll get the contribution from here. If I'll subtract it, what is this, what I'm getting? 18750 minus 12500. This will give me what margin or contribution, right? And 50,000 minus 26250, right? Let me see it. What coming? 18750 minus 12500. This is giving you. And what is it coming? All right, I can see this is what the margin is coming here. All right, okay. Okay, so 62502337. I'm writing it here. Margin. We are considering margin or contribution. I told you sometimes we consider the contribution, sometimes we consider the price, sometimes we consider the contribution. Depends what is writing. In this question, they're asking you to find out the contribution ratio, right? Sales, margin or contribution mix variance. They're asking you, we will consider it, right? So what is it in the question? It is, we have calculated the contribution as what? 6250 and 23750. Write, find it, solve it, and find it. What is it coming? I can write it here. 1500 minus 1400 into 6250. Right? You can find it in this way. I don't know if it's correct or not. I have to calculate it. Okay, and then what is it? We have what? 600 units. 600 units, right? Then 700 units, right? And then what is the contribution here? 23750, right? What is it coming? You can see. So one of the values is coming as favorable and another value is coming as unfavorable, right? So this is how we will find the mix variances, right? Total we can calculate. So we can see it is coming as favorable and it is coming as unfavorable. We can calculate the sum of it. If you want, let me quickly calculate it. So we will find the sum of these two values. 625,000 minus 237. So this is coming as 1750 unfavorable. All right, unfavorable, right? This is 1750 unfavorable. This is what sales margin mix variances. All right, this is what sales margin mix variances. All right, okay. Now what do you have to calculate? Sales margin volume variances. Okay. Sales right? This is what we have to find out. Sales margin volume variances. Right? This is what we have to find out. Sales margin volume variances. Okay. Okay. How we will find it? Volume variance means what? Standard quantity minus actual quantity into standard selling price. Right? Okay. Let's consider. Standard quantity, actual quantity, right? I can take the standard margin as it is, as we have already calculated it. I'm writing it here. 6250 and rupees 23750. Right? Okay. What is the standard quantity for actual output? What is the actual quantity for actual output? You can see it is given in the question. Actual quantity is given as 1500 and 600. Take a standard quantity. 1500 and 500. All right. Okay. Now solve it and tell me what's coming. Yes. What is it coming? Budgeted actual quantity into okay, just give me 1 minute. Okay. So actually, if you will see, this is a formula for finding what? Sales margin volume variances, right? But if you will see in the question, they're asking you to find out what? Operational variances. Now, how we find the operational variances? We consider the revised standard quantity here. Revised budgeted quantity. Right. Let's see what information do we have in the question. The company had sufficient capacity to meet the revised demand of 750 of 500. So we have two product, 300 WPMPO, and we have 5000 WPMPO, right? We have these two product here. What information is given? The total market demand for PMPO system was budgeted, but after the result of a supplier reducing the price of this product, the total market of PMPO system raised by 50% in January. Okay, so they have mentioned you the market has raised for this product. Okay, So the company had sufficient capacity to meet the revised budget of 750 unit. So though the sale was 500, standard sale, what happened? They have said that standard कितना बेच सकते हैं इस product को. They were saying 500 unit इसकी बेच सकते हैं. ठीक है? It was given in the question. How many units? Standard unit which we can sell in the market. It was given, right? 1500 of it is given, right? 1500 of this unit can be sold in the market. Then it is given that 500 this unit can be sold in the market. These were the standard unit which you can sell in the market. But what is happening? There is some changes in the market. So what is happening? Because of that, they have mentioned instead of 500 unit, you can sell 750 units in the market. Right? So revised unit which we can sell in the market is 750. You know that we consider the standard, then revised standard, then actual unit sold. Standard and revised standard will give you planning variances. Standard and revised standard will give you planning variances. Revised standard and actual will give you operational variance. In this case, we are considering revised standard minus actual so that we can calculate operational variances, right? So they have considered here what the revised standard, which is 750 here. So now you can solve it and we can find it. Yes. Now we can solve it and we can find it. Okay, actual quantity sold. Let's do this. And this is coming as 0. All right. Oh. Just give me 1 minute. All right. So you will get the margin volume variances, right? You will get what? Margin volume variances, right? Which is coming as adverse. All right. Why adverse? Why are you writing it adverse? It is coming positive. Why are you writing it adverse? For a reason I told you. Actual quantity sold is less than the standard quantity sold or revised standard quantity sold. You can see actual quantity is less, which is not good. So unfavorable. Actual quantity sold is less than the standard quantity sold or revised standard quantity sold. It is less, right? Actual quantity is less here. So that means that it will give you an adverse variances, right? I hope it is clear to all. Okay. So in the question, they're asking you operational variances based on revised market detail. Market जो change हो रही है उसको consider करो, then find the operational variances, right? Okay, just give me 1 minute. Then comment briefly on the measurement of key performance. Is it a good performance? He was saying उसने ज़्यादा units sold कर दी. यहाँ तो adverse आ रहा है. Right? It is adverse. This is coming adverse. Even the margin mix variance is coming adverse. Right? It is not coming favorable. Do you still want to give the bonus to this person? No, sales variances. He has done nothing good, right? So accordingly, you can write it in comment. You can see. See, first they have only defined it. In first 2 lines, they have only defined the planning and operational variances. Actually, they have started the comment here. Okay. So it is given here. His measurement of the key performance is incomplete if we revise. Just give me 1 minute. Okay, we have not calculated the overall margin variances. Why is it favorable? Just give me 1 minute. It is given in the question, is it? Okay. So if you will see, it is given in the question and they are considering these points also to answer the question. Okay. So it is given sales margin volume variance of this. And on the basis of this, he is expecting what? He is showing the total variances of the company is coming favorable. So I need bonus. But in the question, when you have done the question, you found that he is actually not responsible for all favorable variances, right? And they are talking about the planning variances also. So there are some fault in planning variances. And he is saying that this sales manager, he cannot take all the credit, right? So for that reason, he will not be getting any bonus, right? Okay, so you can see here it is given he is not responsible for all favorable variances. He is not responsible for everything, right? Okay, so with this, let me wind up this. Sorry, let me take a break and then I'll come back again. And what we will do, we will solve some more question. Now we will take a question of learning curve. Okay, we will cover learning curve after this. Let's take a break. Right, let's take a break. Then we will come back. Yeah, hi. So, one of the student is asking me that, ma'am, how is this coming? Just give me 1 minute. So, one of the student is, give me 1 minute. Okay, so one of the student is asking me, ma'am, from where these two figures are coming. Actually, this is what revised actual quantity. We consider the standard ratio and we consider, after considering the standard ratio, we calculate these revised actual quantity, right? So actually, if you will see, we have two type of standard ratios, right? First is standard ratio, then we have revised standard quantity, because the planning is changing here, planning variances. So we have the standard budget and then we have the revised standard budget. So now, since it is operational variances, we will not consider the standard budget. Standard budget was 1500 and 500. This was the quantity I've seen, right? In the question, it is mentioned 1500 and 500 is the quantity which was standard budget of sale, right? Standard budgeted sale. This was the quantity mentioned, standard budgeted sale, right? But revised standard budget is what? 1500 and 750. Now the point is that if you will see here, we are calculating operational variances. So if we consider the operational variances, see, when we consider the total variances, when we don't find the planning and operational variances, we solve the normal question in such traditional variances. So in case of traditional variances, we consider this ratio 15:5. Right? In traditional variances, when we find the mixed variances, we consider the revised standard quantity, revised actual quantity based on the standard ratio. So this will be the standard ratio. But here, since it is operational variances, we will consider this ratio. We will consider this ratio. So for 1400 and 700, they have used this ratio, 2:1 ratio. So they have divided 2100 with 3, and it was coming as 700, and then multiplied it 2 and 1. They have multiplied it 700 and 200, you know. So in this way, they have calculated it. All right. Okay. Now the point is that mixed variances we know now, margin variances we know, and we have committed. Okay, we have done this question now. So let's take a question on learning curve. Give me 1 minute. Let's take a question on learning curve. Labor rate and efficiency variance. Achha, I want to take this question also. Then we can take learning curve ratio. Let's take this question. And after this question, we will take learning curve. Read the question. So what is the question? You can read the question here. What is mentioned here? NZSCO Limited uses standard costing system. So they're using standard costing system for manufacturing its single product. What is the single product? ANZ is the single product. Okay. Standard cost card per unit is given, right? Material cost is given, labor cost is given, variable overhead is given. It is all standard. Then what is given? Actual and budgeted activity be given here, right? So with the help of this activity based costing variances be calculate kar sakte if they will ask you. They're not asking, right? Okay, then actual figure is also given, right? For the month of Feb, they have given you the actual figure. What is the material? What is the labor? What is the variable overhead? It's all given. Now the question is that they're asking you to find out the direct labor rate variance. They're asking you to find out the efficiency variances, right? Okay, let's find it quickly. Right? So what is the question? What do we have to do? Direct labor rate variances. Right? We have to find out direct labor rate variances. How will we find it? Standard rate minus actual rate into actual hour worked. Okay. And then what do you have to calculate? Direct labor efficiency variance. How will you find it? So standard hour minus actual hour into standard rate, right? Okay, now let's see what information we have here. Standard rate is given or not? 800 per hour, the rate is given. It is working 6 hours to produce 1 unit. Okay, what else we have? They have given you total hour and they have given you the total cost. That means we have to see how many actual units they are producing so that we can see how much actual standard labor hour is there, right? Okay, so we can find the rate by dividing these two values. So let's find the rate first. 2,442,000. Okay, divide by 3. So this is coming as 8.14. The standard rate is what? Standard rate is rupees 8.14. This is what? Standard rate. 8.14 is the standard rate here. Okay. What is the actual rate? This is your actual rate. So we will consider the standard rate. We will consider the actual rate. And then you will see how many actual hour he has worked. All right. Solve it quickly. Yes. Solve it quickly. Tell me what is it coming? Achha, one thing now, after this, I have to find out what is the standard hour, right? Solve this quickly and tell me what is it coming, then we will do. Okay? I'm using the calculator. So this is coming as 0.4 into 3,42,000. This is favorable, right? Because actually we end up paying less money to the labor. So it is coming favorable. Okay, now let's see what is the standard hour, actual hour. Now always remember, this is what standard hour for actual output. See how many actual unit you are producing. What is the actual unit? Output. So the actual output, you can see here how many actual unit we are producing. 52,000 units. These are what? The actual unit which we are producing. Okay. And what is the standard hour required for 1 unit? 6 hours is required for 1 unit. If we are producing 52,000 units, we will see how much standard hour is required for actual output. Standard hour for actual output. If you will multiply it, you will get standard hour for actual output. All right. Okay. So this is coming as 312 hour. So this is what standard hour for actual output, which is here coming as 312 hour. What is the actual hour here? The actual hour is 3 lakh. And what is the standard rate here? 8.14. Just solve it, you will get the answer. 8.14. Right? So this will be 12,000 into 8.14. So this is coming as what? 9768468. Right? This is what coming here. No? 680. Now, whether it is favorable or not, how will you find that actual time taken is less than the standard time? Good, right? You can see actual time taken is less than the standard time. Good, right? So it's a favorable variance. As you can see, both the variances are coming favorable, right? So this is how we can calculate it. But in the question, they're asking you to interpret the question, not just the calculation. They're not just asking you about the calculation. So let's do the interpretation for this question. So what is direct labor rate variances and what is direct labor efficiency variances? Okay. So देखो, rate variances means how much you are paying. Are you paying more than the standard or are you paying less than the standard, right? Generally, it is within the hand of the HR department. They negotiate with the laborers. By the way, here we don't have the labor. They negotiate with the employees. है ना? So they negotiate with the employees and then they will see. Okay, point is that if we pay less than what standard we have set, it is good for the company. But if we pay more than what standard we have set for the company, it is not good for the company. So the point is that we are finding here what labor variances, labor rate variances, how much we are paying. Are we paying less? Are we paying more? Right? If we pay more, it is adverse. If we pay less, it is good or favorable. Okay. Next is efficiency variances. Efficiency matlab how efficiently he is working. Is he working fast or is he working slow, right? So you have to check whether he is working very fast or he is working slow. So this is what labor efficiency variances. Both are coming favorable. That means we are paying less and the labor is efficient, they're quickly producing the goods. So both are favorable variances here, I can see, right? Okay. So it is all written here. You can read and you can conclude, right? Direct labor rate variances is given and efficiency variances is given. You can read it, right? Okay. That's it. No conclusion. Okay. So interpret the labor rate variance, efficiency variance. Do you want to read the interpretation? Okay, let me read it quickly for you. So rate variances. See what is given. So adverse, if the rate variance is coming adverse, indicate labor rate per hour is more than the set standard. You are paying more than the standard. The reason may include such as whatever. Is it coming adverse? Give me 1 minute. What happens? Standard rate, actual rate. Okay. This is again a mistake. Standard rate is what? Standard rate is ulta likh diya maine. Standard rate is this. This is standard rate and actual rate is this. Actual rate is this, right? So ulta, right? Standard rate is this and actual rate is this. Okay, just reverse of it. So it is coming as unfavorable. So 8.14, right? Okay, so this will come adverse, ulta, right? Adverse. So he is paying more than, here you can see he is paying more than the standard, which is not good, unfavorable. Let me see this one also. Standard hour is correct and actual hour is correct. So this is favorable, right? Here we are paying more, but the labor is efficient. This is what I can conclude. Okay, we are paying more. It's an adverse variations. We are paying more, but the labor is efficient. Okay. So it indicates the worker has produced actual production quantity in less time. He's very efficient. He's quickly producing the goods with less efforts, less time, right? So the reason of favorable, this variation is coming favorable may include other things also. What? While setting the standard, budget slack may introduce and many other reasons, but it is favorable. It is good for the company. It shows that the labor is working efficiently, right? Okay. Okay. So just you can see here it was a standard. I told you it's standard, right? And it is actual. So I told you it is actual. So this will be standard rate and this will be actual rate. Okay. Okay. Now let's do one thing. Let's take one question of reconciliation. Do you want to take one question of reconciliation also? Let's take one question of reconciliation also. Okay, this question, let's take one question of reconciliation. So reconciliation, in this case, what happened? We reconcile the budget. Okay? So we have the budgeted profit, we have the actual profit, and we will see why the difference is coming. What is the budgeted profit? What is the actual profit? Why the actual profit is not equal to budgeted profit? There are certain reasons. All the variances are the reason because of which the actual profit is not coming equal to budgeted profit. So what they have mentioned you, see, the point is that you can see we have the sale, minus we have all the costs. It can be variable cost, it can be fixed cost. So sale minus cost will be the profit of the company. So this will be what? The profit of the company. Now the point is that you can see variable and fixed costs we can have. Sale minus cost is profit. Now the point is that we can have the budgeted profit, right? And we can have the actual profit. Now it should come equal. If it is not coming equal, that means your variances, all these variances are not correct, right? They are either favorable or unfavorable, because of which the budgeted profit and actual profit is not coming equal. Okay. So these variances are not good, because of which the variance is not coming equal. Okay. You can have the sales variances, favorable or adverse variances. Okay. Sales variances, it can be favorable, it can be adverse. Similarly, you can have all the cost variances. It can be material variances, it can be labor variances, it can be variable overhead variances, it can be fixed overhead variances, it can be anything, right? So you will see all the cost, right? It could be material, it could be labor, it could be variable overhead, it could be fixed overhead, right? All the variances you will see, favorable, unfavorable, these are all responsible for the reason that the budgeted profit and the actual profits are not coming equal. So you will see, like if you will see in this question, they have given you the information about the sale, they have given you the variable cost, they have given you the fixed cost. So I'm assuming that in this variable cost, they have already considered the material, they have already considered the labor, and they have already considered the other variable overheads. So it is all variable costs. If we add this, we will see the variable cost, we will get the variable cost, we have the variable cost here, and we have the fixed cost here, and we have the sale here, total sale here. Okay, now the point is that they're asking you to reconcile the budget. They have asked you to reconcile the budgets. All right, they are reconciling the budgets. Okay. So if you will see here what is happening, you have to calculate the sales volume, planning variances, operational variances, sales price variances, then you have to calculate the variable cost variances, and then you have to find out the fixed cost variances, right? Now the point is that why here only they are calculating the sum, variable cost variances, fixed cost variances, why sales variances they are calculating in detail. This is in detail, okay, but this is just a sum of everything, right? This is just a sum of everything. So why is it in detail? For a reason, because the information given in detail, right? They have given you the unit sold, budgeted and actual quantity sold. They have given you the sale price. You can find the selling price per unit also with this information. So since the information is in detail, so it is possible to find these variances in detail, while the information for variable cost and fixed cost is not in detail. You can see, okay, it is not in detail. For that reason, they have just taken the sum of the variations, right? They have just taken the sum of the variations. Okay, so I have just given you the logic why they have taken just sum, and why in sale they have given you in detail, for a reason, because it is possible to find it in detail. All right. Okay, so now let's try to solve it. Okay, just give me 1 minute. So you can see here, what information do you have? They have already given you the variances, by the way. So what is given here? Budgeted minus actual. Okay. So let's start with the cost. See, what is the budgeted profit? This is your budgeted profit. Okay. What is the actual profit? This is your actual profit. It is given in the question. Budgeted profit is given, actual profit is given. All right. Then what do we have here? Budgeted fixed cost is given, actual fixed cost is given. You can see actual cost is more than, actual fixed cost is more than budgeted fixed cost. You can see, which is not good, unfavorable variance. You can see 1500 is a unfavorable variances, adverse variances. I can write it here. Okay. Okay, then you can see the variable cost variances. So you can see the actual cost is less than the budgeted cost, which is good for the company. So this is coming as favorable variances. Okay. This is coming correct, right? This is good for the company, right? This is coming favorable. Next, sales price variances and volume, sales volume variances. You can see actually total sale variances. Give me 1 minute. So you can see that actual total sale variances is actually sum of price variances and volume variances of sale quantity. They have given you the separate information, कितनी unit sold हो रही है, किस total sale value क्या है, and let's find the selling price per unit also. Okay, so selling price per unit, give me 1 minute, let me find this also. So what is it coming? Selling price per unit is coming as what? $10.5 is coming. Okay. Actual price is what? I hope the calculation is correct. 92900 divide 165 10.26. All right. So this will give me the price variances. And I have to find out price variance. I will calculate total. You can see price variance, we will calculate total, and the volume variances, we will calculate the planning and operational variances. That means in between, we have to find out the revised budget, revised budget for the quantity sold. So we will see, do we have any information for the revised budget? The budgeted data showed in the table is based on the assumption that the market size would be 4 lakh unit, but it turned out to be 3,75,000 units. Okay. So what is happening? They have given you the budgeted data here, 2 lakh unit, means half of the market size. This was the budgeted, half of the market size. Now you have to see what is the revised budgeted. What is the revised budget? So they are saying the total market size has changed from here to here. So revised budget should change accordingly. Half hona chahiye iska. 375 divided by 2. What is it coming? Okay. This is coming, right? Revised budget. Now, what do you have to do? You know the budget standard quantity sold. You know what is the revised budget quantity sold. What is the actual quantity sold. So now for the quantity, you can find the planning variances and you can find the operational variances, right? And for the price variances, they have taken the sum. Okay, sum of planning and operational variances. Let's do this. Okay, I'm doing it here only because so that you can just make the comparison of everything. Okay, so let's do it quickly. So what do we have to do? We have to find out first the sales price variances. Sale price variances. So what is the sale price variances? Standard selling price minus actual selling price into actual quantity sold. What is the standard selling price here? Actual selling prices, actual quantity sold is. So So what is it coming? Okay. Okay. So after this, what do we have to find? We have to find the volume variances. Okay. Sales price variance is coming as 39,600. Now let's find the volume variances. I'm writing it here. Is it favorable or adverse? You can see actually you are selling it at less price than the standard, which is not good. Standard was set high, actual selling price is less. You're selling sasta bech rahe ho, which is not good, right? So this will be adverse variances. Okay, this is adverse variances. Okay, so after this, we will calculate what? After sales price variances, we will calculate quantity variances. Let's see how we will find the quantity variances. Right? Let's see how we will calculate the quantity variances. Sales quantity variances. Okay. What is the standard quantity sold? What is the actual quantity sold? But here we will find sales quantity planning variances, planning and sales quantity operational variances. Right. So what is okay, what is the sales quantity planning variances? What is the formula for it? We will see what is the budgeted quantity sold, since it's a planning variance, minus the revised budgeted quantity sold, revised budgeted quantity sold into 100 selling price. Okay. Standard. Similarly, here what will happen? Operational variances, we will see what is the revised budgeted quantity sold. Revised budgeted quantity sold, right? Minus what is the actual quantity sold, okay, into standard selling, right? Now see the information. What is the revised budgeted quantity? This is the revised budgeted quantity. What is the budgeted quantity sold? It is given in the question. Budgeted quantity sold was what? So budgeted quantity sold was 2 lakh units. Revised budgeted quantity sold is this, right? Let's consider the values. So what is the budgeted quantity sold? 2 lakh units, right? What is the revised budgeted quantity sold? 1875. What is the standard selling price? You can see 10.5. Use it, solve it. It is unfavorable. The variance is unfavorable, not good. Planning management, right? Who is responsible for it? Planning or strategic level managers. They are responsible for this variances. Okay, 2 lakh minus 187500 into 10.5. This is coming as 131250. 131250 unfavorable. Adverse. Okay. I'm writing it here. Planning variances what? 131250 adverse. bracket में. Okay, next one. So what is the actual quantity sold? Let me take the actual quantity sold, 1,65,000. So I'm considering it here. What is the revised budgeted quantity sold? So 1,08,75. This was my revised budgeted quantity. 1,875,000 minus 1,65,000 into standard price was 10.5. Right. This is what? Okay. Let's do this calculation quickly. What is it coming? $1,875,000 minus 165,000, right? Okay. So what is it coming? This is coming as 22,500 into 10.5. This is coming as 236,250. 236,250, right? This is what coming here. Okay. Now you can reconcile, you can just check whether it is coming correct or not, right? Just consider these values. It should be coming equal to this value. Okay, let's do this quickly. 519,000 minus 131,250, right? Next, 236,250, right? Then next, 396,000. Next, plus 191,850 minus. See, the answer is coming, right? So this is how we can prepare a reconciliation. Here, what is happening? We are reconciling. What we are reconciling? Here, we are reconciling the budgeted profit with the actual profit. So reconciliation statement will give you the reason why the budgeted profit is not coming equal to actual profit. What are the reason? And you can see everywhere, wherever possible, if they will give you the information, it is possible to find out the planning and operational variances. You will see the information accordingly. You will know that whether we should find here the planning and operational variances, yes or no. So here they have calculated the planning and operational variances for the volume, for the quantity, because they have provided you the information that the market is changing, right? Here they have given you the information that the market is changing. So we have to consider this information to solve the question, right? Okay, now let's take some more questions. So I have planned to take one question on learning curve also. Just give me 1 minute. Let me see if I can take question of learning curve. Okay, so we have now the learning curve related questions. So let's take this question. I'll see, this is a question, a new question, which is not explained in the class. So just give me 1 minute. I'll be. That's it. Okay. So let me do one thing. I'll be taking this question. So I'll be taking this question, explaining you something here, which is new for you. So always just remember, we apply the learning curve to find out the standard rate for actual output. You will see, like in most of the cases, they are asking you to, they have given you the information of learning curve. Remember that we apply the learning curve to find out the value of standard rate or standard hour, right? An actual hour, actual rate will be given in the question to find out the variances. Standard rate can be found. Now, what happened in case of learning curve? What happened? We assume that when the labor will repeat the same task again and again, he will learn the task, right? And he will take less time. He will be more efficient. Initially, he will be less efficient. Then he will learn it. He will improve and he will become more efficient. Point is that he will reach to a place where there is no scope of learning. So once he will reach to that place where there is no scope of learning, everything will become fixed, right? Everything will become fixed. So we will do it here. What is it? Let's see. So what is it? The learning curve as a management accounting has now become or going to become an accepted tool in industry. For its application are almost unlimited. When it is used correctly, it can lead to increased business and higher profit. When used within a proper knowledge, it can lead to the lost business and bankruptcy. Okay. State precisely your understanding on learning curve. You can write it. Theory of the learning curve. You can write it. The area where learning curve may assist the management accounting. You can write it. Illustrate the use of learning curve. Calculate the expected average unit time for making 4 machines and 8 machines. Data is given. The direct labor needed for first machine. First machine. Right? What is the data for first machine? It will take 1000 hours. For the first machine, it will take 1000 hours. The learning rate is what? The learning rate is 90%. This is the learning rate. And the time here is what? 1000 hours. And what else? The labor cost rate is given per hour. Material cost is given. And the fixed cost is given. They have asked you what? They have asked you what? Calculate the unit cost. They are asking you to find out the cost for 4 machine and 8 machine. Ab dekho, just remember, because this is something you don't know. So when the unit will be double, we can apply the learning curve as it is. So from first to second machine, right? Then from second to 4 machine, right? Then 4 to 8 machine. So what is happening here? When the learning curve, when the units are double, when the productions are double, you can apply the learning curve, right? So on one side, the production is double. On the other side, you can apply the learning curve, right? So what is happening here? You can now apply the learning curve here, 1000 into 90%, right? This is coming as, I believe it is coming as 900 hour. Now what is happening? The production is double here. Again, apply the learning curve. So 900 into 90%. 810 hour, right? Again, you can apply the learning curve here. Okay? Into 90%. सीधे लगा रहे हो, कुछ नहीं करना, कोई फॉर्मूला नहीं लगाना, सीधे learning curve से rate आ जाता है, right? So just apply it directly. Maybe in some question this can come, because what I believe you should know both the formula. One of the formula we have already covered in the class. So this is the other formula. I don't know whether you have the question or not on this, but I believe you should know about the second thing also, because it is very easy. So why should we leave it, right? So this will be coming as 729 hour. Generally what happened in between, if they will ask you, you cannot apply this formula. Like if they will ask you to find out what will be the time for the 7th machine, you don't know. We cannot apply this formula for the 7th machine. If someone will ask you what will be the time for the 5th machine, we cannot apply this formula for the 5th machine. So how will you find the time for the 5th machine? Average time to produce the 5th machine. Apply this formula. Y is equals to AXB. You can apply this formula. So if they will ask you to find out the time for the 3rd machine, we cannot apply it. For the 3rd machine, you will apply this formula. Y is equals to AXB. Right? So for the 5th, 6th, 7th machine, right? 6th, yeah, for 7th machine, what you can do, you can apply this formula, AXB. You can apply this formula. Otherwise, if the units are doubled, when the production is double, you can directly apply and you can directly find the time. Otherwise, it will be very big. You have to apply here the logarithm, anti-logarithm, and then you have to calculate it. So I have explained you both the formula. So you can see here, if they will ask you about the fourth machine, you can tell them the time. How much time is required for the fourth machine? It is now 810 hours, right? This is the time for the fourth machine. And what is the time for the eighth machine? The time for the eighth machine is 729 hours. So this is the time for the eighth machine. And when you know the time, then you can find the cost easily. You know the material cost, you know the labor cost, you know the overhead. Find it easily. Okay. So this is something, take a screenshot of it or write it somewhere, right? So when the production is double, you can easily find the time. But for other numbers, you have to apply this one formula, right? Okay. Take a screenshot of this or write it somewhere. Yeah. Okay. So they have not asked you about the time. I know the time now, but they have asked you, if we produce 4 machines, what is the total cost? You will see what is the material cost. For one machine, when you are producing one machine, the cost was rupees 1,50,000. If you produce 4 machines, just multiply it with the 4. Okay. Acha, labor cost. You know now the time is taken as 810 hour per unit. Then multiply it with 4. Then multiply it with rate, rupees 15. Labor cost. Then what? This is average time. We are producing 4 units. 4 के साथ multiply करो, you will get total time for producing 4 units. Multiply it with 15, total labor cost. Then you know the fixed cost will remain same. Fixed cost 60,000. So you will get the answer accordingly. Point is that this will not come in the exam, okay? Because variance analysis, they will give you the question related to variance analysis. My point is that just know that how to find the hour, machine time, okay? Time required for 4th machine. When you're producing 4 units, right? You can see, you can apply this formula directly when the production is double. When the production is double, you can apply the formula directly. So this is what I want to tell you here. Okay, next. Now here, let's take this question. It's a new question. I just want to check it. Yes. Give me 1 minute, huh? Okay, let's take this question. So this is an exam related questions. It was an exam in 2019. Let's solve this question. Let's solve this question. Read this question. I hope it's a new question for all of you. Read it and we will solve this question. Janvi, do you want something again? I just read your comment. Computation of average cost. Once again, which average cost? Yes, Janvi, quickly write in comment. I just read your comment. What is it? Quickly write it if you want to ask it, if it is not clear. ठीक है. अच्छा, इससे पहला वाला question on learning curve, you need not to do it. Just understand the time, how you can find the time. That's it. They will not ask you the question of finding the total cost. They will ask you the question of variances. Okay. It will come under only variances. Yes. Okay. Shall I continue? Is there any doubt? Last question. learning curve. ठीक है जानवी. So this is what I'm saying in last question. Don't see how they have calculated the total cost. ठीक है, not relevant for you. In question, they will ask you about the time, and from the time, how you can find the rate variances or the efficiency variances. They will ask you the question of variances, not the cost. Okay, but still, if you want, I can take it, no problem. Just give me 1 minute. If you want, I can take it because it is, I think this question is not from your book. So give me 1 minute. Okay, where is the question? So just give me 1 minute. Give me 1 minute. Huh? This is the question we have, right? This is the question we have. So in this question, we have calculated the time. I told you that how we can calculate the time, and then they are asking you to find the cost, right? So cost when they are producing 4 machines and the cost when they are producing 8 machines. You have to find out the cost. ठीक है. अब देखो, I'm not explaining this question for a reason. They will not ask you this type of question in exam. ठीक है. What you have to do here, you have already calculated the time, as I told you. When the production was double, 1 to 2 machine, then 2 to 4 machine, then 4 to 8 machine. You can apply the learning curve. Here it was taking 1000 hour. Then here it will take 900 hour, right? Then 810 hour. Okay, and then 810 into 90%. Just keep multiplying them with 90%. You will get your, right? Multiply it with 90%. You will get the time. Now for 4 machines, see whatever they are asking, right? You know the labor rate, find the labor cost from here. You know the material cost per unit, find the total cost here. You know the fixed cost, find the total fixed cost, right? So this is how you have to do. Not at all difficult question, right? I'll be taking a little difficult question now. Okay, this is not a difficult question. I want to take a difficult question now, right? Which they can ask you in exam. Just give me 1 minute. I lost my question. This one. So this question is from exam. I'll be taking this question now. Okay. So what is the question? DK International is developing a new product. Company is developing what? A new product. Life of the product is to produce 16,000 units during their life of the product, and the unit will be sold at 102 per unit. This is what? The sale price. The production will be in batches of 1,000 units throughout the life of the product. How many units they are producing? 1,000 units they are producing. Right? They're producing 1,000 units here. Then what is happening here? The direct labor cost is expected. The direct labor cost is expected to reduce due to the effect of learning curve for first 8 batches produced. Oh, it is mentioned that the labor cost will reduce. Why? Because they are applying learning curve. Learning curve की वजह से लेबर धीरे धीरे सीखेगा, efficient होगा, कम टाइम में ज्यादा प्रोडक्शन करेगा, कॉस्ट कम लगेगी. If the labor is efficient, the wastage will reduce. If the wastage will reduce, you will save the cost, and the cost will be less. All right. The direct labor cost will remain constant at the same cost per batch as in the 8th batch. अच्छा देखो हो क्या रहा है? From 1 to 8, from 1 unit to 8 unit, the labor will work. 8 unit के बाद, it's all constant. The cost will be constant, rate will be constant, unit will be constant, production will be constant, everything will be constant, right? Then what is happening? The direct labor cost for the first batch was 1,000 unit is expected to be, this is the cost. Okay, so for first batch, I'm writing it here. For the first batch. Right? For the first batch, they are producing how many units? 1,000 units. In first batch, they are producing this much unit. And what was the cost? 55,000 was the cost. And the learning rate was 90%. Achha, what else? The direct material and non-labor related variable cost is what? rupees 50. So material and labor cost per unit was this. Non-labor related, huh? So material and variable overhead, material plus other variable overhead, not including the labor cost here, is rupees 50 per unit. Okay. Then there are no fixed cost. 90% learning curve, some values are given and they're asking you calculate the labor cost for an 8th batch. Okay. They're asking you to find out the labor cost for the 8th batch. Okay. I just told you that first to second batch, you can apply it. Then second to 4th batch, you can apply it. Then 4 to 8 batch. Right? We can apply it. Huh? Whenever the production is double, we can apply the learning rate. Huh? So what is happening here? How much time he is taking for producing the first batch? Is it given somewhere? Give me 1 minute. Acha, if the time is not given, the production is, just give me 1 minute. So I can see here what they have not given you the unit, but we can take the sorry, they have not given you the time, but we can take the units for finding the cost. Give me 1 minute. So I can do one thing. Here we can do one thing. If you will divide it, what will happen? Just give me 1 minute. We will get the rate also. Rupees 55, right? Now the point is that time is not given, right? I'm just trying to see if time is given somewhere or not. Time is not given. Okay. So what will happen when you are producing the goods? What will happen? This will reduce, right? Time required to produce the goods will reduce, right? What is it? 90% learning curve. Give me 1 minute. Huh? Okay, so since the time is not given, we can take the cost directly. The cost for producing the first unit, we can take the cost directly. Okay. So instead of time, they have taken the cost directly. Now the point is that if you will see in this question, what is happening? I told you, you can apply the cost in this way. I just want to make sure, is it coming equal, correct or not? So the point is that if you will see in the question, they have used the formula. What is the formula? Y is equal to A X B. They have used the formula, right? I believe that if we apply 90% learning curve, it could come the same, but let me use both the method to find it. Huh? I just want to make sure that it will come equal or not. Okay. So what will happen? Give me 1 minute. So for 8th unit, we can use the formula and we can use this logic also. What is the formula? Y is equals to AXB. Okay. A matlab initial time, how much they are taking? 55,000 is the initial time they are taking. Sorry, this is the initial cost they are taking. So what we can consider, either we can consider the time or we can consider the cost, right? They want to find it for 8 unit minus 90% learning curve value is what? Uh, 0.152. This is the value. Now this value is equal to what? This is equal to what? This is equal to 0.729. I can take this value. Okay. Since they have given you the information, we can find it in this way. What is it? 0.729. 55. Is it 0.729? If you multiply this, what is it coming? 55,000 into 0.729 is coming as 40095. This is what coming here, rupees. You can see the time, the cost has reduced. Why? Because of learning curve. But this is what average time. We know average time for the 8th unit. For total 8 unit. This is the average time for total for 8 unit. Now I will see what is the total time of 8 unit. Total time of 8 unit. What will you do? Just multiply this with 8. Okay. Multiply this with 8. What will happen? You will get the total time for 8 unit. You will get the total time for 8 unit. So what will be the answer? If I'll multiply this with, give me 1 minute. So I will multiply it with 8. This will give me the total time, sorry, total cost. So sorry, 320760. This will be the total cost of 8 unit. This is what total time. I told you in last session, average time is different, total time is different. When we apply this formula, we will get average, right? Average of time or average of cost. Here we have taken the cost because I have checked the question, right? So there is nowhere they have mentioned the time for the production, right? If you will see the question, nowhere they have mentioned you the time. In the question, they have mentioned you the cost, but they have not mentioned the time. I read the question completely. Nowhere they have mentioned the time for the unit production. So instead of time, they have given you the cost. So what I have done, instead of time, I have considered the cost. Right? So instead of time, I have considered the cost. Give me 1 minute. Just give me 1 minute. I just want to make some confirmation. So I told you it will come same. Okay? So for your knowledge, I'm just telling you, if you will see, I applied this formula and I'm getting this answer. And I told you one more logic. When the production will double, you can apply the learning rate. So when the production is here double, I can apply learning rate directly. So what will happen? 55,000 into 90%. You can see whatever the value is coming here. This is what I'm just making you comparison and just to make you confirm that both will be correct. So this will be 49500. You can take 49500 here, apply 90%. What will be coming? What will be this value coming? Into 0.9. This is 44550. Then 44550 into 90% is what? Into 0.9 is what? 40095, right? You can see here, if I use this logic, answer is same, right? You can see in both the cases, the answer is coming same. Okay, but the point is that you can use this formula for any units. If you want to find out the time or cost for the third unit, you can apply this formula, right? Y is equals to AXB. If you want to find it for in between 5 units, 6 units, 7 units, you can use the formula. But the point is that when you are using the formula, you need to know the logarithm, anti-logarithm, other things, right? So in case if the question is related to just double unit, 1 का 2, 2 का 4, 4 का 8, 8 का 16, 16 का 32. So when the production is double, you can apply it directly also. You can get the answer very easily. But in between, if they're asking you the cost or the time in between somewhere, then you have to apply this formula. Or this formula is applicable everywhere, right? Even for first 8 unit, like you can see here for 8 unit, they have applied the formula, they got it. But in the question, this value was given. So you don't need to apply the logarithm, anti-logarithm, anything, because it was directly given. You can put it directly and you can find it directly. So in the question, they have given you the direct information. You can find it directly. But in case if this question will become logarithm, anti-logarithm, it will be difficult. So you can check it. If it is related to double unit, you can find the average time directly by applying it 90%, 90%, 90%. You can find it directly also. So for your knowledge, I have explained both the formula. You can apply both the formula, whatever suits you. Okay. But just remember, it will be applicable. This formula will always be applicable when the production will be doubled. Achha, now here what is happening? You have calculated the time, total time for 8 unit. But in the question, they have asked you the cost. You have calculated the total cost of total 8 unit. Total cost of total 8 unit, you have calculated it. But here what they have asked you, what is the cost for the 8th unit? They have asked you to find out the cost for the 8th unit, not total 8 unit. They're not asking you to find out the cost for the total 8 unit. 8th unit, how is it possible? You can find the total time for total, not time, total cost for 8 unit minus total cost for 7 unit, right? You'll find it. Find the total cost for 8 unit, find the total cost of 7 unit, subtract them, you will get the cost for 8th unit. You will get the cost for 8th unit. So now what do we have to do? Like here we have calculated the cost for the 8 unit. Find similarly the cost for 7 unit. So y is equals to ax minus b. So for the first, it is 55,000. The cost for the first unit is 50,000. We have to find it for 7, 90% learning curve, which will be 0.152. See what is it coming. What is this value? This value is directly given. No need to apply logarithm, anti-logarithm, because the value is directly given, right? It is directly given. Take this value 0.744 directly, right? So 55,000 into 0.744. What is it coming? So this is 55,000 into 0.744. So this is coming as 40920, right? This is coming as 40920, right? Why? This time is coming as this. So this is what average time when we are producing 7 units. What is the total time when we produce 7 units? So just multiply it with 7. 40920 into 7 will be the total time. So we know the total time when we are producing 8 units. You can see we have calculated the total time when we are producing 8 units. What we have done, 40095 go, we have multiplied it with 8. You will get the total time for 8 unit, which is coming here as what? 320,760. This is coming, right? Total time for 8 unit. And we will see what is the total time for 7 unit. Time, I'm so sorry. Total cost, not time. I'm so sorry. So total cost for 7 unit. Here we have not assumed the time, right? Here time is not at all given, right? So we are considering the cost. Now what is the total cost for 7 unit? What is the average cost coming? This 40920 is the cost for 7 unit multiplied with 7. See what is it coming. Multiply this with 7, you will get the total cost of 7 unit. You know the total cost of 8 unit. Now you know the total cost of 7 unit. Subtract them. You will get the cost for the 8th unit, right? Okay. So what do we have to do? Multiply it. 40920 into 7. It is coming as 286,440. Now what is the difference? So 34320, right? This is what, this is the cost of 8th unit. What type of cost? Labor cost of 8th unit, right? So in the question they ask you, I'm just removing all the information now. Just give me 1 minute. So you can apply both. I have explained you all possible formula, everything, right? It is easy to apply this formula here, y is equals to axb, for a reason, because they have already given you all the information. You don't need to apply the logarithm or anti-logarithm here. Okay. So calculate the direct labor cost for the 8th batch. We have calculated. Then calculate the expected contribution to be earned from the product over its lifetime. Now in the question they're asking you over the lifetime. What is the cost? What is the contribution? So over the lifetime, first find the sale, total sale. Then find the total cost, right? Then you can find what? Then you can find the contribution also, right? Okay. So the point is that if you will see the question, let's solve the second portion of the question. How many total units they are selling? 16,000 units. 16,000 units they are selling. Acha, learning curve kahan tak applicable hai? You can see up to 8th batch, the learning curve is applicable. Acha, now see how many units they are producing in 8th batch. So you can see in first batch, how many units they are producing? 1,000 units. They are producing in first batch, they are producing how many units? 1,000 units. So if they will produce 8 batch, in 8 batch, how many units they will produce? 8,000 units. Point is that learning curve will be applicable from 1 to 8. After that, whatever the cost he is taking from 8 to 16. 8 to 16 means next 8,000 unit. 8, 8, 16, right? So from here to here, they have produced 8,000 units. Right? This is what total production. From first batch to 8 batch, they have produced how many units? 8,000 units. So up to here, they have produced 8,000 unit. Ab remaining, this is what remaining unit. 8,000 unit. ताकि total क्या हो जाए? 16,000 unit. So up to 8th batch, the learning curve is applicable. Whatever the cost is for 8th batch, it will be constant for next 8,000 units. Next 8 batch. That will be constant. Right? So this is what mentioned here, that it will be constant for next 8,000 units. All right. And what do you have to see? In the question, they're asking you to find out the contribution, right? So what do you have to see? What is the total sale? Consider it. Then what is the total variable cost? Consider it. Then you will get the contribution, total contribution. So first I need to find out what is the total sale. How many units I'm selling? 16,000 units. At what price? The selling price per unit is given as rupees 102. This is the selling price per unit. You know the total unit which we are selling. You know the total sale. Now, what is the variable cost here? You can see the variable cost. What is the variable cost here? We have material and other overhead as rupees 50. Okay. So this is something which will go with all the 16,000 units. You can consider. But along with that, we have to find out the labor cost. Right? So now we have to solve it for further, right? Achha, just keep it in mind before solving the question. I'll solve it completely. So the cost for the 8th unit is this. So what is the cost for the 8th unit? The cost, labor cost for 8th batch Eighth batch, not unit. Eighth batch is what? Rupees 34320. And the total labor cost for total 8 batch. Total labor cost for 8 batch. So for one batch that was coming as average of 400 something. Let me calculate it quickly. हाँ देखो कैसे calculate कर सकते हो? You have two method. You can use the formula or you can use this also, right? 55,000 was first one. 55,000. You applied learning curve for the second batch. Then you applied it for the 4 batch. Then you applied it for 8 batch. 40095. I can calculate it directly also, right? 95. This is what the time, average time for 8 batch. Multiply it with 8. This is the total time. I'm so sorry. This is the average cost of 8 batch. And if you multiply it, you will get a total cost of 8 batch, right? Okay. Now the point is that, let's see. So the point is that what do we have to do here? We have to find out the contribution. Contribution. How will you find sale? Sale of total 8,000 unit was what? We were selling 16,000 unit. We were selling 16,000 units. And the selling price per unit was rupees 102. And the variable cost. Okay. Variable cost will include other overhead and labor cost also. Okay. We will consider both here. So the overhead is 50. No? Yes, it was 50. Rupees 50 into 16,000 units, right? This. And labor cost was for total 8 batch. Total 8 batch. 8 batch ka matlab total 8,000 unit. This was my total 8,000 units. So total 8 batch ki cost was what? 4095 into 8,000. 40095 into 8. Okay. So this was my 40095 into 8. This was my total labor cost for 8 batch, right? And then next 8,000 unit ke liye, we know for the 8th batch, yahan se the labor have no scope of learning. वो सीख गया है. So the cost will not reduce now. Abhi the cost which will incur for the 8th batch, right, will remain constant for the 9th batch, 10th batch, 11th batch, up to 16th batch, because the production is happening here up to 16th batch. Total 16,000 unit. So our next 8th batch ke liye time is constant. With cost is constant, 34320. For the next 8 batch, 34320. 34320 is the cost for the next 8 batch. Into multiplied with 8, you will get the total labor cost. Just consider them. Now you have the sale, you have the material and other overhead costs, you have the labor cost also. Solve it, get your answer, you will get your contribution. Simple. Right? Now, if you have any doubt, you can ask me. Just solve it, you will get the answer. If you have any doubt, please ask me. So this is our last session. I hope you have learned well, right? And ma'am, in the question, it's also given 50. Yes, Janvi, they have given 50. 50 is what? The cost of material, the cost of variable overhead. Company can have other variable overhead, which is not including the labor cost. So हमें क्या करना है? Total variable cost के अंदर material cost, labor cost, overhead, सब कुछ आएगा ना? Variable overhead. That will all become the variable cost. तो material और variable overhead constant है. With the production, आप चाहे 1 unit बनाओ, 2 बनाओ, 10 बनाओ, 16 बनाओ, 1600 बनाओ, whatever your production is, material cost बराबर है, variable overhead बराबर है, constant है, but labor rate जो है, it is decreasing with learning curve, है ना? तो up to 8th unit चेंज हो रहा है, बट 8th यूनिट के बाद कांस्टेंट हो गया है. सो वी हैव कैलकुलेटेड व्हाट इज द टाइम रिक्वायर्ड फॉर 8th यूनिट, 8th बैच, राइट? आफ्टर 8th बैच, 9th बैच, 10th बैच, 11th बैच, अप टू 16th बैच, टोटल 16th बैच में प्रोडक्शन हो रहा है. Up to then constant हो गया, but before that it is learning, right? So we have calculated what is the time for total 8 batch, then what is the time for 8th batch. 8th batch will remain constant, so next 8 batch के लिए use हो जाएगा. So this is how we have learned it here, right? I hope it's all clear. Yes, so it was nice connecting with you all. So let me wind up the session. Thank you so much. Have a nice day and take care, all of you.